So hi everyone, my name is Jordan and we are right back to our series of chart patterns and how to trade them. So in this video we are going to be looking at the triple bottom chart pattern. So the triple bottom chart pattern looks like this when you're seeing one on your screen, and the price is coming from a clear downtrend. It forms the first low, it fails to break, it becomes a level of resistance, tests the resistance, swings high, tests its previous level of support, then retests the resistance, and after break of this resistance level, that is when we confirm our triple bottom chart pattern. So it looks like this. It has three bottoms. Okay, so the triple bottom chart pattern occurs on a clear downtrend and it signifies a bullish reversal. Therefore, a triple bottom is a bullish reversal pattern. So this pattern is confirmed after the price has broken through the previous level of resistance, which is known as the neckline. So you could see that right here we have the neckline, which is the level of resistance for this swing and this swing. Okay? So after the price has broken this neckline, there we confirm a triple bottom. So we confirm the triple bottom after the break of this level of resistance or the neckline, because the market could still go down and create another bottom. And this is no longer a triple bottom. This becomes a consolidation. So the bottoms should not necessarily have the same swing lows. It's supposed to be swing lows. So when the market is coming from a clear downtrend, we could have this first swing low, then another one tries to be longer than the previous one, something like this. So you could see that these swing lows are not the same, or sometimes the swing lows could be the same, okay? Or sometimes you could find something like this. So the swing lows should not be necessarily the same, okay, like here, because now this looks perfect. But in the actual sense, when you go to the market, you would find a lot of fluctuations like this. Or if not that, you could find something which is so clear. If not that, you could find something still like this. That still remains a triple bottom. So the triple bottom chart pattern can be traded in three major ways. One is support and resistance, another one is the breakout, and another one is break and retest strategies. So the first strategy we are going to be looking at is the support and resistance trading strategy. So in support and resistance, we trade what we expect the market to do, because if we know that in a triple bottom, the market is going to be coming from a clear downtrend after the market forming a level of support that it fails to break, and it's supposed to come and retest on this previous level of support. It will go, instead of testing on this level to swing low, it will break the structure. After breaking the structure, we know that the market is going to come down, test the support level, it goes back, test the resistance, goes down, tests support, goes up, and then breaks the structure, and then maybe retest, and then continue. So what we do is that we trade what we know the market is going to do. So if we are coming from a clear downtrend, so after the market forms the first bottom, we know that the market is supposed to come back and test this level of support, okay? And this is the first level of resistance. So here we wait for a candlestick pattern and then take a short trade to this level of support. After the market reaches the support level, we wait for a candlestick pattern and then take another buy trade to the level of resistance. So after hitting the resistance, we take another trade and then we go to the support. After that, we also take another buy trade to go to the resistance. So we have 1, 2, 3, 4 trades only. And remember, in the double bottom, if you didn't watch the video about the double bottom or the double top, you should go back and watch it. We had how many trades? We had one. After the first bottom, we had one trade and then the second one. But here we have 1, 2, 3, we have 4 trades only. So here we wait for the market to either break the structure or it could go back into the consolidation, okay? Or sometimes it could make a structure like this. After forming these three bottoms, it comes as if it is retesting and then it breaks through the neckline, but it rarely comes to reach here. So we just take these 4 trades and rest and wait for the market to come and break the neckline. If it breaks the neckline, we wait for a retest and then take a trade. If it doesn't break the neckline, it would come and break this level of support, then come and retest it and then continue swinging downwards. So you could see here that the market was coming from a downtrend and then it created the first bottom, okay? So we know that we are waiting for a candlestick pattern on this level of support. There was a level of support around there. So we wait for a candlestick pattern and here we have some dodges. You could see them. So we could put our sell stop order there and then catch some small pips to go to this level of support. So here we wait for candlestick pattern. So you can see here that we have a bullish engulfing, though it was not so much successful because this bullish engulfing had taken up a lot of pips. So we could catch very few or even make a losing trade, which is still normal. So after the market tests this level, we had to look for a support level, but you could see that it was not touching the support level well. So we could just ignore this trade because it would give small pips. But you can see here that we have a clear bullish engulfing. So we could make a trade from there up to here. So that is how we trade with support and resistance levels within the triple bottom chart pattern. So what we do is we wait for the market to make the first bottom. After the first bottom, and then we look at this level of resistance. So when the market tests it, we wait for a candlestick pattern, and then after that, we take a short trade. After this short trade, the market tests the level of support, wait for a candlestick pattern, and then we take a long trade. If the market tests a resistance, candlestick pattern, take a short trade, and then right here, still do the same thing. So you wait for the market to break the structure, or it could come back and just continue to its consolidation format. But when we take 4 trades out of that, we just rest. So another strategy is what we call the breakout strategy. So within the breakout strategy, we wait for the market to clearly form the double bottom chart pattern. Okay, sorry, the triple bottom chart pattern. So it is confirmed, we said, after the break of that neckline. So we wait for the market to come and break the neckline. So when we are going to trade the breakout strategy, we wait for a candle that closes entirely above the neckline. So we would wait for a candle that closes above the neckline, and that would be our entry candle to catch the wave up. So you could see that right here we have our first bottom, then the second one, and then the third one, and then here we have a break, as though the break did not close entirely above the neckline. So we wait for a candle that closes above. So you could see that this blue candle here, this bullish engulfing, did not close entirely above because half of its body is still in the support zone, sorry, on the resistance zone. So we can see that this blue candle here is the candle which closed entirely above the neckline or the support zone, sorry, the resistance zone. So we could put our order from here and put our stop loss, and we wait for the market to give us a wave up. So when the market is going to go high, we still don't expect it to go high in a straight line. But what is going to happen is the market will make some few swing lows, okay? Or sometimes it could go high at once. But in most cases, it would move like that to make some short-term retracements or short-term consolidations. So that is how we trade the breakout strategy. We have to wait for the market to confirm that we have formed this triple bottom. And after the neckline break, we wait for a candle that closes entirely above the neckline. And then we make our buy stop order to catch a wave up. So another strategy is what we call the break and retest strategy. And in the break and retest strategy, still wait for the market to come and create the triple bottom. So creating the triple bottom, we wait for the neckline break. After the market breaks through the neckline, we wait for the market to come and retest on this neckline, and then wait for candlestick pattern, and then we catch the wave up. So right here, you could see that here we have the first, then the second, and then the third bottom, and here we have our neckline. So when the market broke through it, if you wanted to trade the breakout strategy, you could enter the market from here, right here. That is where you would put your buy entry order. But now we are looking at the break and then retest. So we have to wait for the market to come and retest. So you can see that right here we have the first bottom, second bottom, third bottom, and then a break. So we have to wait for a retest. So after this retest, we wait for a candlestick pattern, and then we could be able to catch the wave up. So you can see that right here we have for a candlestick pattern, right here, you can see that we have a bullish engulfing. And then on top of that, we also still have here a bullish hammer. Sorry, a bullish pin bar. On this bullish pin bar, you could also make a trade. So here we could put our buy entry right here, and then a stop loss, and then we could wait to catch a wave up. This level of resistance is take profit 1, and then take profit 2 is our second level of resistance. So that is how we trade the triple bottom chart pattern. And on this retest, they normally give good trades. Okay. So thank you so much for watching this video. Do not forget to subscribe to the channel for more videos like this and for support. In case of anything, you can comment on the video and then I'll be able to reply to you. So thank you. Bye bye.